Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you already haven't. And I just want to do a disclaimer. Nothing said on this video or past videos should be construed as investment advice. It's just my opinions and thoughts on the market. And it is the Christmas season. This will be my last week of doing videos before the year. I got my Santa hat on. I'll be going away just like Santa. I'll be on a plane though instead of the sleigh. So let's get into today's action. Obviously, today Wall Street had a lot of coal, not a lot of goodies in those stockings, but coal. And let's share my screen real quick. Where is that share button? So anyway, today the Fed decided to cut interest rate points 25 basis points. And you see the markets, you look at it, the S&P that tanked 178, the Dow 11 over 1100, Nasdaq 716, even crude oil which was up. Gold took a smack today, 62 bucks. And of course, what happened? And let's see where it is. The Fed, the reason what they said is on their forward-looking guidance, they are worried. What was that? About inflation. So instead of cutting four times, they're going to cut two. And I just wanted to highlight, let me see. Where was that? Inflation for PCE. Like, why doesn't it do the CPI if it's so valued? Uh, Look at that. We see ourselves still on the track to cut. He didn't want to the market was getting frothy, so let me see. CPE now, or there it is. Said expenditures, which exclude, they think it will be ending next year. I'm just paraphrasing. Next year, 2.5, slightly higher than their 2.2%. So that means even the Fed is expecting inflation to increase more. And I was just thinking, no one was talking about, and besides this channel here, no one was talking about we're going to have inflation problems next year. It's going to heat back up. And so obviously, where did the Fed get us? They're obviously, maybe they are smart enough to see it, but they weren't telling it publicly. It wasn't showing up in any of their studies. They watched this channel. I don't know. I don't know about all that, but yeah, the Fed, they watched this channel and they were watching my videos and they realized I was right. And so they want to get ahead of it. They don't want me to be the only one talking about it. I think I'm the only one, maybe Peter Schiff, but he says inflation's going to happen every year. I was talking particularly this year. Of course, what happened when they decided, look at this. See, the Fed is trapped. Interest rates, they're up 2.5% or 2.49. And if you look at it here, 4.38, really, the interest rates didn't really start rising until the Fed started talking. You can see it right here. So, yeah, so that's how it is that the Fed, they're admitting what I'm admitting. Now, what they don't want to disclose to the public and stop sharing is that the economy is going to get worse. And the other thing is with interest rates not going up as much, we're going to start seeing really horrendous bad economic data. So now we got higher inflation and a worse economy, which is stagflation. And so now the Fed is trapped. And I think next year they could possibly be playing a game of chicken. they're going to have to either surrender to inflation or they're going to have to surrender the economy. And cycles suggest maybe they're surrendering the economy, and that would be really bad inflation. I think they're going to surrender inflation first, then in the next year's economy, because I think things will get so bad, they're going to be like, it won't matter. But yeah, you're looking at right now, they're even admitting by their own forward guidance, inflation's going to be higher than previously thought. And this is because of the rate cuts they've already done. And it's not because of the rate cuts today. And they're going to be behind the curve and they're going to have to start doing rate hike cuts. And I think at some point we're going to you look at it, it's all there, worst economic data. And just look at the markets. The markets really, I haven't seen now percentage points wise. I haven't seen markets look this bad. And I'm going to go to a 1 month chart for all those who think the stock market never goes down, which does feel like that. But this month, if you look at it on a month basis, it is down 2.5% for the month on a month basis. So 6 months, I think it's still up, but and then on a 5 day basis, it's down 4.13%. And then today it was down 2.58. So this hawkish news is really bad for the stock market. And the thing is about this is if you've been following this channel, you would have known that the Case-Shiller S&P, the Case-Shiller, I think top 20 real estate indexes, those were going down. So you see inflation starting to come into the system. So you can see the Christmas hat coming into the system. They're stuck now. And if you looked at one of my other past videos, I talked about gold and how they think it will do well because inflation's coming up, but the Fed will have to raise rates. Now, the thing is, if you look at inflation, I think that's going to surpass interest rates. And that's why I think gold will outperform, is I think inflation using whatever index the Fed uses or the CPI is going to rise faster than interest rates. And that's the thing. Let's look at oil today. Oil prices. Yeah, oil was down today. And it looks like it's possible a bottom. I mean, obviously none of this is financial investment. I don't talk about oil much. Oil, you never know who's going to dump oil in the market in the Mideast, so that's why it's very tricky. But oil was down, but if you look at it, it was really up today around noon. And then just the Fed started getting hawkish. And I still am wondering for the days. I want to see the Dixie. Let's see if the dollar, because interest rates went up. Let's look at the US dollar index today. That really went up. And if you look at it, the hawkish move. So maybe let's do a month. Dollars up on a month, up 2.86 months, 6% this year. On a 1 year, it's basically flat. 5 years, 11%. Looks like the dollar's in a bull market. So I don't think we're anywhere near. I don't think we're anywhere near dollar bear market. I don't really expect a dollar bear market till next decade when the treasury market blows up. Then I think a lot of foreigners will be But they're very frothy in the US, meaning FOMO with foreigners. I will do a video later, so that's all I have to say is that if you look at it, these Fed minutes, they're are scaling back rate cuts, and they're even admitting inflation's coming up, and inflation's going to come back next year. Maybe we'll get back to $5 gas. So anyway, if you haven't seen my video for the year, I have it with Rahul. I had him on as a guest, and and I won't be doing videos after this week, so I'm trying to do a blitzkrieg because there was a couple of things I wanted to talk about, just haven't had the time. And that's all. I hope you all have a joyous holiday season. Merry Christmas. And just remember, nothing said should be construed as financial advice, just my opinion on what's going on. So I will see you all later.